Welcome to episode 5 of the Philly Multifamily Podcast. Today on the show, we have Ian McKee of Go Magnum Loans. Welcome.
Let's go. Thank you for having me, Sam. Happy to be here.
Thank you for coming in. It's a Saturday, beautiful Saturday. So thank you for taking the time to come.
Yeah, rainy day.
Rainy day.
Yeah. This is an amazing office. The Scope office. Shout out Scope. This place is very impressive. We're
settling in nicely here. Anyone's welcome to come visit. Open door policy. So we have fun here. I like coming in. I come in like 4 days a week, maybe 3.5, depending how busy I am. But you got to come by. Your office is not too far from here either, right?
Yeah, we're at 461 North 3rd Street.
Okay.
So by the Target in Northern Liberties.
That's a nice Target. Do you go there a lot?
I Instacart everything.
Nice. Nice. Well, welcome.
Thank you.
So we were just talking, chit chat about Silicon Valley Bank.
Mm-hmm.
The default is the second largest default in U.S. history. Go Magnums is not a bank, but you guys create financial products, which is, in the same industry. Can you kind of like shed some light on the implication of this news?
Sure. Well, this is going to affect a lot of people, not in terms of the mortgage or the residential market necessarily, but for the people who are invested in that bank, the investors, and who they, everyone that they're in contact with, there is obviously going to have some negative effects.
Yeah.
Personally, which I could see affecting the market, but I wouldn't imagine it affects it here in Philadelphia. No. What are your thoughts about the whole situation? And
so the fact that it's in Silicon Valley and some of the biggest tech companies in the world, bank with this bank. And, I think I said $6 billion out of the $200 billion of deposits are not federally insured. So this is a huge issue for the banking system as a whole, right? Essentially, some of the highest growth companies in our nation have their deposits insoluble right now. So does the government step in, bail them out, or insure all these deposits where, they're only insured up to $250K and just bail them out? Or do they have another banking institution come in and take over before Monday morning? So it's going to be interesting. I don't know what's going to happen, but it sounds like a lot of people say it's the canary in the coal mine to maybe possibly a bigger recession. It's been talked about, 6 months, it could be in a big recession. So this could be the first signal. But yeah, I don't know. It's definitely something to keep an eye on and see how it plays out.
Yeah, absolutely. I'm always focused on the local market, right? Because that's where our community is. It's where my livelihood is, right? And so I'm always focused on how the implications are going to be on the local community. And I think it's really massive to see how this story plays out.
Yeah. Well, let's dive into it. Tell me about yourself and how you got into the real estate industry.
Yeah, absolutely. So my name is Ian McKee. I am a residential mortgage broker with Go Magnum Loans. I've been in the lending industry now for going on 4 years. I started, the way I got into residential mortgages, I actually was living in Milwaukee, Wisconsin. I graduated from the University of Wisconsin-Whitewater and kind of hung out in Wisconsin, I guess, settled in Wisconsin in Milwaukee. And I grand opened Lifetime Fitness. So it was myself, a couple other salespeople, 10,000 square feet in Brookfield, Wisconsin. Are you familiar with the brand Lifetime?
I was a member in the DC suburbs and I loved it there. I would go all the time. I would just hang out there, play basketball, lift weights. They have everything. It's Globo Gym on steroids, pretty much.
It's a $4 billion company.
Yeah.
So Lifetime has a lot going for it, and their gyms are top tier. So it was the first location opening up in Wisconsin, and I was one of their salespeople, and I gave like 500 tours in a week, 2 weeks. I mean, this place was just mobbed. It was right off the highway.
Yeah.
People, if you build it, they will come. Like, people just swarmed this place. It was great. And in networking and doing all of my sales presentations, there was a gentleman who ran his own mortgage company in Brookfield, Wisconsin. And he followed up with me. He said, I think you'd be a rock star in the mortgage industry. And at that time, I was reading about Rich Dad Poor Dad, Robert Kiyosaki, and some other investments. And one of the things that really stuck out to me is this gentleman who's looking to recruit me. He had 2 dialysis centers that he owned. He had 2 commercial lots. The 35-person mortgage company was operating out of the commercial lot. And I was like, yo, this guy's got it going on.
He's doing a million things. Yeah.
He's a baller. He knows how, he understands passive income. And so I was already reading about it. And then when he reached out and recruited me, I was sold. So I started as a full source loan originator over 3 years ago now.
That's amazing. And then how did you come to Philadelphia and get into Go Magnum?
So I always knew that social media was really important. And I went down to Miami and I was at this social media boot camp. Shout out Cody Kearns. And we were on yachts, taking picture lifestyle photos.
Right.
We had different entrepreneurs come on and talk and pitch their business. There were about 45 people there. And one of the gentlemen was a high producing loan officer from the Philadelphia area. And I just went up to him and introduced myself, and he started coaching me because I was looking for mentorship at that time when I was early in my career.
Yeah.
And plus the people I was around in Wisconsin were all just cranking out refinances left and right. And nobody had time to coach me. I was kind of left on an island. So I asked this guy, I was like, hey, do you have any advice, whatever? And he started giving me some great advice. And fast forward 5 months later, him and I are still in contact, and I implemented his stuff, and I started closing $1 million a month as a full source originator. I was like, oh, wow, this guy actually knows what he's talking about. This is pretty cool. And the next social media boot camp I went down, I brought like 6 of my realtor partners. I was like, yo, this place is awesome. Let's go down to Miami. And he ended up offering me a position here at KW Philadelphia. He said, hey, I'd love for you to be one of the in-house lenders. I think you're playing really small in Milwaukee, Wisconsin. He said, why don't you come out East Coast? There are 560 agents. I think you'll be able to make a name for yourself. And I was like, that's a great idea.
Well, I've never been to Milwaukee. I don't know what type of market it is. Is it much smaller or not as transactional?
So there are 750,000 people who live in Milwaukee County.
Okay.
It's a smaller place.
Yeah.
But the Milwaukee Bucks won the championship a couple years ago. There's a lot of multifamily there. There's a lot of 4 families and duplexes.
Right.
Tons. There's Milwaukee downtown and all that around it. Milwaukee, actually, the Wisconsin market, that Milwaukee area, has a lot of great opportunity for wholesalers and for investors. But for me, it was just too small. At that time, I'm 28 now.
Yeah.
I knew every place to go. I was pretty bored. I was just bored with Wisconsin.
On to bigger and better things.
Dude, the East Coast has a lot going on. So
there's a lot of hustle and bustle here.
A lot of people. You're
a very friendly guy too. So I think moving to a new place, you have no trouble making new connections and friends and business partners.
One of the things I love about Philadelphia is that if you take the 5 largest cities in America and you draw a 100-mile radius around it, Philadelphia actually has more people than New York, 30 million. And I think New York is 29.2 million. Okay. So yeah, Philadelphia, big market.
You can get around to other cities for a day trip or whatever. You can go to New York, the Shore, Baltimore, DC is not too far away. And New Jersey is right across the bridge, which is the most densely populated state in America. So
there's a lot of opportunity out here.
Yeah.
But there's also opportunity in Milwaukee. Excuse me. It just looks different.
Right. Interesting. So Philadelphia market is better. That's what you're saying?
I like it. I like the luxury market.
Right.
We do some luxury deals at Go Magnum where we can fund a $2.5 million home for 5% down.
That's amazing.
Yeah, that's called Go Jumbo. Go Jumbo. And I love jumbo deals. I love jumbo clients. And that wasn't even in my brain in Milwaukee because that market's not there.
What were some of the challenges from like moving from Milwaukee to Philadelphia in terms of changing companies, changing markets? I'm sure you had a couple existing clients in Milwaukee, and then coming into a new market, you like didn't have to start from scratch again.
Correct. Yeah.
What is something that like you would give advice to someone looking to do that? Or if you were to do it again, maybe you do something differently?
No, I mean, I wouldn't do anything differently, but I would say my biggest piece of advice is dive in head first. Grant Cardone talks about commit first and figure the rest out later.
Yeah.
Ryan Serhant also talks about that. Commit first, figure the rest out later.
Yeah.
So I've always just been a big believer of that.
Okay. I mean, you're doing it. You're living by it. I see it. So that's why I wanted to get you on the show.
I appreciate it. You too, Sam. It was hilarious, guys. When I first met Sam, it was at a networking event. Shout out Jordan Brody.
Yes.
CEO of Metropolitan Group. And he set the intro. And I remember I put a meeting with you on my Calendly for us to make sure we talk. So yeah, I'm glad we met, and I'm glad we've been able to build a friendship.
I remember because I think we had to reschedule a couple times, but yeah. We were both persistent on like rescheduling and then like actually meeting, but took a couple of tries, but we got there.
For sure. And I love your style too. You're like, hey, here's my resume. Here's some of the deals I've been able to work on and put together. And I was like,
yeah.
Sam is about his business. I'm like, this is a good way to operate.
I try to be level-headed and, humble or whatever you want to call it. But if you don't promote yourself, no one else is going to promote you, right? Like, you have to be your biggest champion because everyone else is kind of looking out for themselves, right? And I don't try and hype it up tremendously. I just say, look, these are the numbers that I do. This is my track record. I do X, Y, and Z. I execute on, most of the stuff I commit to. So if it looks like, we can do something, great. If not, we part ways as friends. So
I love it. I love that approach too.
Yeah. I feel like a lot of the old school salesman tactics or coaching maybe is a bit outdated and has kind of been learned by consumers, and they kind of get a red flag or warning signal that goes off when someone's a little bit too salesy or high pressure and they get turned off. So I also am just a relaxed person by nature. I think I'm pretty chill, and
for sure.
I think it works for my sales style, right? I'm not trying to be someone who's not authentic, and I've kind of tailored my style towards that. So
tell us a little bit more about your sales style.
I think to my fault, I'm not as pushy or persistent as some of my peers, right? And I'm conscious of that. I think I've made myself improve on it because there's definitely been times where I've lost out on business for not being more persistent or more better with follow-ups. But yeah, when I was first getting started, I didn't have a track record or a big team to rely on, right? So I put a lot of faith on myself to be able to execute on maybe some listings that were a little bit overpriced in the past, right? And some of them don't always pan out, but I think I was really good at leveraging every opportunity into another opportunity, right? and putting myself in the shoes of the person I'm pitching to. And ultimately, it's like, for a lot of these guys, it's dollars and cents, and then lifestyle, right? Because a lot of commercial real estate is a second business or a passive investment for someone who operates some other business, right? Or they get into it by whether they like it or not, right? Just by operating factories or stuff like that, right? And then they, run these businesses, but then a huge amount of the value is associated with the real estate, and then they don't know what to do with it, right? So I just try and give them perspective on what I would do, what's realistic, and what is attainable. It doesn't always work out, but
right, of course.
I think you just have to pay it forward and make the most of every opportunity that you get. Like, I don't have a gazillion.
I love what you said, how you leveraged each opportunity, like the first opportunity led to the next and led to the next.
But also, like, if I get a listing and I know, like, I learned something from it, or I prove some sort of like value, right? And I like to relay that on to everyone else it applies to, right? And I repeatedly do that. And then, that's how I build the relationships with the clients. And, then we take that information, strategize it for themselves. And, if they want to, just run their business for better, that's great. If I get a sale out of it, maybe down the line, that's like the win for me, right? It doesn't always work out, but that's kind of how I run my business. It's a advisory role, right? I want to align myself with the client and always do everything in their best financial interest, not just what's in my financial interest, which is getting a sale or a refinance, right? Sometimes the best option for them is not to sell, right? And I'll tell that to them.
That's great.
So
that's great.
So you do a lot of new purchase home originations, right?
Yeah. Residential mortgages.
So that's something I am not particularly versed at, and a lot of younger first-time home buyers are not versed at.
Correct. Correct.
Which are probably a lot of our friends and acquaintances, right?
Yeah.
How would you coach someone to buy their first house?
So I'll start off with some facts. The average first-time home buyer is 33 years old.
Okay.
It used to be 31, so that's going up a little bit. And I would start with financial education, right? Based off of where they're at. I want to meet the client where they're at. One of the things I love about residential mortgages is that I can meet a client who has a 500 credit score and pull their credit and start giving them things to do, real action items to enhance their credit score, lifestyle changes. Hey, maybe consider getting this job, or really helping those clients. Mm-hmm. And then there are also the clients who have the 800 credit score, who are financially educated, who are running businesses.
Right.
So what I love about residential mortgage sales is that it is, you work with the full scope of America, and some folks need more help than others.
Sure.
Mm-hmm.
So let's say someone comes to you, I make, 100K a year. I have 800 credit score.
Yeah.
I have very low debt and expenses. I want to buy a house.
Okay.
What's next? What do I do?
Okay, great. Well, I'm glad that you're talking to me first. The first step is to get pre-approved.
Okay.
I would ask if they have an agent that they're working with already. Mm-hmm. If they do, I get their contact information. But if they don't, then that's an opportunity for me to refer to one of my realtor partners, mm-hmm. someone who would do a great job fulfilling that client's needs. But the first step is for me to do a full pre-approval. So we send out a loan application that takes around 5 to 10 minutes to fill out. And then we have a follow-up conversation about, hey, this is what you're approved for. This is what the current market is offering for your credit score. This is what monthly payment would look like. Do you have a house that you're interested in right now? Because a lot of times folks will come to us from Zillow. We have Zillow leads. And they'll be like, I love this house, 232 Main Street. And we'll type up not only a pre-approval, but also an estimate of costs, what it would cost them to get into that home and what the monthly payment would be.
And then you can show them like different types of mortgage options, right? So there's this I know very little about, right? Because I don't even own my own house, right? Like I'm a renter for where I live, but so like what is the difference between like FHA, conventional, jumbo? I don't even know what else is out there.
No problem.
What are the like high level differences between those product types?
Yeah. So FHA is an awesome product for first time home buyers and for investors, right? People want to get an investment. They can purchase for as little as 3.5 down, and they can buy a single family, 2 family, 3 family, or a 4 family.
I have a FHA. That's all I know. That's what I wanted. And I got a 4 unit.
Nice.
I wanted to max it out. So
what? Nice. Where'd you?
Fishtown.
Fishtown.
Yeah.
Great buy.
But I don't live there. I just rented it all out anymore.
Right. So that is a great thing for a first time home buyer to do. Your perfect example of that is to purchase their first home with an FHA loan, and they could buy a multifamily for as little as 3.5 down.
Right.
Which is awesome.
Yeah.
And when qualifying, like I've qualified teachers who make, $40,000 a year, I can take up to 75% of the expected rent from the other units. Okay. So it helps their qualifying income.
So they can get a bigger loan.
They can get a bigger loan because it's going to be offset by the rent payment, but really it's towards the landlord to pay the mortgage. Yeah,
right.
Exactly.
Interesting.
Which you already execute on. The next is conventional. Conventional loans are very common. It's probably the most common. It's definitely the most common loan type. It's either 3% down, 5%, 10, 20. A lot of folks don't know they could put 3% down.
I didn't know that.
So you can put 3% down a conventional loan, just as long as you hadn't been on title of another home in the last 3 years. Otherwise, it's 5% down.
Okay.
So conventional is a great product for first-time home buyers as well. They can actually get into it for 3% down, which is less than 3.5.
Right. And is this for...
Conventional financing is most common for condos and single-family homes.
Okay. All right. Gotcha. That was my question.
Yeah. I got you.
You beat me to it.
I got you.
And then jumbo is for that
anything above a loan amount above $715,000.
Okay.
And it's different per county. Like in LA County, like I think the jumbo goes.
You can buy like a shoebox for $750,000.
But it's dependent on the county.
Right.
Yeah. But jumbo $715,000
in Philadelphia.
Yeah.
Okay. Interesting.
Then there's DSCR. We do a lot of this product. That's debt service coverage ratio. And that product is awesome. We'll give an example. A duplex, you want to purchase a $200,000 duplex. Yeah. What you need is 20% down to close on the property, plus closing costs. You can negotiate that, whatever. But if you have $40,000, you should basically show that you have that in your assets. You show 2 recent bank statements, and we can write the loan. We don't need to have tax returns. We don't need to show income, pay stubs. All we need to document is that the individual or business has the funds to close on the property. And the rent schedule, we get a couple different rates, right? If the rent schedule is at 1.25, so it's renting for more than what the mortgage payment would be, the debt service coverage ratio, then we're able to write that loan easily. We're able to write it at 1-to-1 and even under, down to 0.68. But the rate is a little bit higher due to the risk. So the less risk, the better the rate.
Interesting.
But that's a great product for investors. A lot of investors use that. And I wouldn't say first time investors, but a lot of investors use this product. And the DSCR product is also a cash out as well. So are you familiar with the BRRRR method?
Yes.
Of course. So
buy, rehab, rent, refinance.
Repeat.
Repeat.
You got it.
Yeah.
You got it, dog. So we do the refinance. We can cash out up to 75%. The investor can pay off the private money, the hard money, or if it's their funds, whatever, take that money and put it in their next investment or make a rehab, consolidate debt. People are able to accelerate their wealth with a cash out refinance.
Right. And this DSCR is more, it's calculated also based off the asset itself, right? So it takes a little bit risk off of the individual and puts it on the property, right?
That's correct. Yeah. So it's not on the individual really at all. It's mostly on the property. It's a collateral based loan.
Right.
Right.
Interesting.
That's great. Love that.
Yeah.
And let's see.
And
I just mentioned four. I mentioned FHA, conventional, jumbo, DSCR. That's the majority of our stuff, I would say. Yeah.
There's a lot.
And then real quick.
Okay.
Sorry. The DSCR can be used in a lot of different uses. Already this year, we financed some commercial properties where it's like a pizza shop on the first floor and then 3 units above. Mm-hmm. For the viewers, that's called mixed use commercial. And we could use the DSCR product for mixed use commercial.
Right.
And then also to finance multiple units, like 6 unit, 30 unit,
commercial
40
loans.
units. Yeah.
Okay.
The debt service coverage ratio alone has a lot of ability to it where it can really help investors.
Yeah. There's a lot of mortgage brokers in the landscape.
For sure.
What differentiates Go Magnum from everyone else?
Yeah. So most people in 2000, I'll start with a little history lesson.
Please. I love history.
Yes, I love history too. And we're here.
It repeats itself. That's why you got to pay attention.
So in 2008, most people were brokers, mortgage brokers. Mm-hmm. And when in the wake of 2008, a lot of those folks ended up joining correspondent banks. They got into correspondent lending because it was basically offered more safety behind the guise of the lending institution. And that's where a majority of these guys and gals ended up in correspondent lending. So when I started off in the industry, I was a correspondent lender. Some correspondent lenders include where I started Bank of England Mortgage,
okay,
here in the local market, Guaranteed Rate, Movement Mortgage, to name a few. And now in 2023, I would say 80% of the industry is correspondent and 20% is broker.
Okay.
And the reason why I made the transition from correspondent lending to being a mortgage broker was the freedom and flexibility. As a correspondent lender, I only got one set of rates. So I would do my underwriting, I would do my thing, and then I would look at my rates, all right, this is what we can offer you.
Right.
I was like, all right. The way I got to Go Magnum, so I was sitting in the KW Philadelphia office, and in walks Brandon Bailey. Shout out B Bales.
Shout him out.
Shout out B Bales. Brandon walks into the KW office, and it was my second or third time seeing him that week, and I thought he was a realtor, so I went up and introduced myself to solicit business. And he was like, "Oh, I do mortgage too." And I was like, "Well, I've seen you in here a lot this week. I'd love to grab a drink with you. I'd love to buy you a drink." And he said, "Hey, I've got a closing tomorrow at 3:00. Why don't we meet after the closing tomorrow at the Sofitel?" And I was like, "Okay, yeah, that sounds great." So we sat down at the Sofitel and we're talking. And he said, "Ian, I actually used to do what you do. I used to be a correspondent lender." He was like, "Here, look at my closing disclosure. Look what we just finished." And the rate was 2.675. And that day, 30 days back, whatever,
yeah,
I was quoting 3.25%. And I was like, "How did you even do this?" And he said, "Well, Ian, there is a distinct difference between a correspondent lender and a mortgage broker."
It doesn't sound like a big difference, right, on a percentage basis, but on a percentage wise, it's 25% less, right?
It's significant in monthly payment and total interest.
Yeah.
So when I saw that, I was like, "Oh, wow, this is a very attractive thing." So when I met Brandon brought me in and introduced me to Christian, who started the company 10 years prior, now 11 years. And we talked, and it just seemed like such a right fit in terms of entrepreneurship, mindset, but also in the ability to deliver to our realtor partners and customers, just bringing so much more value as a mortgage broker. And then, I'm just to finish.
Please.
And then the big difference between Go Magnum Loans and other mortgage brokers is that we're in our 11th year of business. And one of the things I love and respect is that Brandon and Christian have taken licks as businessmen, and they've also had tremendous highs. And being young in my career, I'm in my 4th year, 28 years young. And they're, Brandon, I think, is 39 and Christian's 41. I so appreciate their experience.
Right. This is a new business, right? You said like before the last, cycle, it was mostly correspondent bank. Like
it was mostly
100%, 90, like 99.
In 2008, it was all brokers.
Right. Okay.
And then because they got a lot of them, the industry was wiped out and reorganized with the SAFE Act. A lot of them were like, "Oh, let's join correspondent lending. Let's get into these."
So you're like, I don't want to say you're like the last of a dying breed, but like you guys are like unique in that you're like 80% of the marketplace is limited and handcuffed to what their loan programs dictate.
In 2022, as rates started to rise, the marketplace began to favor the broker because of the more advantageous rates. And so what we're seeing is a lot of correspondents are transitioning, if they're able to, if they have the business ability, are transitioning over to being a mortgage broker. And then what answers your question even prior to that is what makes us different. We're in our 11th year of business.
Right.
And Go Magnum Loans, it was Magnum Opus Federal Mortgage Corporation.
Okay. It's
a mouthful, but if you know what Magnum Opus means, it's a really, really cool thing.
I don't know what it means. What is it?
We'll bring Christian on for that episode or something. We'll talk about it because he does it very eloquently. But Go Magnum is who as we transition into our new brand. And what makes us different is marketing and people. Having the ability to market one's products effectively is a very powerful thing. And there's just so much synergy with the Go Magnum brand and the loan products. It's Go Nani, which is our DSCR product, our Go Conventional. It's so integrated, and it allows, I don't think we're a last of a dying breed. I think more people are going to transition. So I think
you're a pioneer.
I'm a pioneer.
Yes.
I'm a leader out front. And I think I found a needle in the haystack.
You're front running the herd, is what you're saying.
Well, Christian and Brandon were the front runners. I was able to catch on, and I'm the next wave of young entrepreneurs.
They crawled and walked so you could run.
Yeah, as Rick Ross said, they built it ground up. I found it renovated. So I'm happy to be part of Go Magnum Loans for the 2nd decade of business and to be a forefront and a young entrepreneur and leader for the next generation.
Yeah.
Because a lot of folks, don't want to work a 9-to-5 job. They want freedom and flexibility in their life, which you have as a real estate broker.
Scope is a very similar company, right? Like, we're only 4 years old. So
nice
to see another company, go out on their own and become very successful is like very validating.
Yeah,
right?
Absolutely.
And, I mean, we're sitting in our new office that we were in we started off in a co-working space, and our company has grown tremendously. So
yeah, that's phenomenal. How many folks do you have at Scope?
It's tough to keep track. I think we started with 4 agents, and then we've tripled, I think, since then. And we've also increased our staff as well.
Nice.
And then we also have a mortgage company for commercial lending.
Yeah, commercial debt.
Commercial debt. And they do all different product types as well.
Great.
But I wanted to have you on because I don't think there's really any major conflict. I think, there's a lot of syndication that we can do between the two of us. So that's why I wanted to have you on. I like working with you. So
I appreciate it.
What do you do for fun?
I play golf. I'm a member at Philmont Country Club, so I play golf as often as possible. I do some yoga. I would say that's fun.
That is fun.
Yeah, golf's definitely more fun.
Golf is
I do yoga so I could be a better golfer.
that is mega brain.
Yeah, facts, bro.
Yeah, you're training for
Golf's just so fun. Like you go out there with your buddies and you whack the ball and you could just say whatever out there, depending on the group. Sometimes there's men and women, you gotta be on your P's and Q's, but when it's just the boys, it gets pretty fun.
If you like objectively look at golf, it's like you're in a beautiful manicured park, on a nice day, and like, once in a while you hit a ball. And it's like, what more could you ask for? Like you're with your friends. You can ride around on these little golf carts.
Yeah, and I've met a lot of amazing people at golf courses too.
Yeah.
Yeah, I caddied for 8 years in the Chicago suburbs. And yeah, I love golf. I love being on golf courses. I love it, bro.
I'm like deep in the golf rabbit hole right now. Like,
so you like to do it for fun as well.
I like to do
you
this
caught the bug.
So we're gonna play a bunch this summer.
I'd love to host you.
Yes, I'm gonna take you up on it. How can people find you?
Yeah, people can find me on Instagram. I'm mortgage_champion on Instagram. My email is Ian at gomagnumloans.com. And you could also attach my number in the show notes. But yeah, reach out to me. Happy to help. Happy to assist.
He means it. Like I'll send Ian a lead, and he'll like immediately follow up and be like, "What can I do?" And he means it. He's a follow-up expert. So thank you for coming on the show.
Oh, hey, thanks, Sam. Appreciate you, brother.
All right. I think we're